Please pay attention that when you're analyzing the chart, the most important task is finding trend of the market. You need to learn this if you want to be a successful trader. The most effective way is price action analysis, but there are also some indicators that can effectively help you on this. In this video, I want to introduce the most powerful indicator that's recently published on TradingView. Just make sure you watch this video until the end and let's get started. Alright, before we add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicator to our chart, here we click on indicators and we search deviation trend profile, this one, which is an editor's picks indicator and written by Big Beluga. Alright, this is the indicator and as you can see, it's overlaid on the price chart. Here we have a line and you can see that it changes color between blue and red, and this is a simple moving average with length of 50. Based on the slope of the line, the indicator decides on trends. The indicator determines a trend shift when the slope of the moving average line exceeds a plus minus 0.1 threshold, and they are shown by the help of these blue and red circles. Red circle is a bearish signal and blue circle is a bullish signal. When we have a red circle, after that the line becomes red and this shows downtrend, and when we have a blue circle, after that the line becomes blue and this shows uptrend. This moving average line has actually a gradient coloring, and in times that it is not completely blue or red, like here in this part, it can show a trading range, non-trending phase of the market. But this is not all with this indicator, and we have another component which is based on standard deviation, and it helps us to measure the strength of the current trend. As you can see, we have standard deviation zones above and below the simple moving average line. 1 standard deviation, 2 standard deviation, 3 standard deviation above the moving average line, and 1 standard deviation, 2 standard deviation, and 3 standard deviation below the moving average line. And they are calculated using ATR, average true range. So the volatility of the market is also considered. So these levels are dynamically adapted to the current volatility of the market. And here we have trend distribution profile, which is in the form of a histogram. On top of the histogram, there is a number which shows how many candles the current trend has lasted. The current trend started from here. So from here up to now, we have 82 candles. And this histogram shows how often the price closed within each deviation zone, which is considered from the starting point of the trend. So the trend started from here at this point, and for this active trend phase, the histogram is showing which of the deviation zones had more frequency. In other words, the price closed inside those deviation zones. When the profile is skewed to 2-3 standard deviation, this shows that the trend is strong. On this chart, you can see that we are in an uptrend and we have more frequency of the bars in 2-3 standard deviation zone. The profile is skewed up and this shows that the trend is strong. In another example here, you can see that the indicator shows downtrend and the profile is skewed down. In other words, in these candles, majority of them are closed within 2-3 standard deviation. When we are in a downtrend and the profile is skewed downward like this shows that the trend is strong. In another situation, when the profile is clustered near the simple moving average line, like this case here, this shows a weak trend, potential trend exhaustion or range market. In this case, you can see that the color of the line is also changed and it is not blue anymore. And with this type of distribution for the profile, we can say that probably the uptrend is already weakening and the price is going to a trading range, or a reversal to a downtrend may happen. So you can see that by the help of this indicator, you can have a clear picture of the trend in the market with an evaluation on the strength of the trend. This indicator can be used on any time frame. For example, right now we are on 1-day time frame, and if for example we go to 4 hours time frame, you can see that we are in an uptrend starting from here, and the profile is skewed upward with more number of candles because we came to a lower time frame. So we have more details here, so potentially more trading opportunities to enter a trade within this uptrend. Here you can see that the price stopped here after making a higher high and probably going for a pullback. So if we go to a much lower time frame, like for example 15 minutes, we can see that in short-term perspective, the trend is down with the profile skewed down, but we know that this is probably a pullback within the longer-term uptrend. So we try not to enter a short position, and the safest option is to look for long position opportunities which would be in the same direction with longer-term trend of the market. This indicator is a perfect choice for trend following strategies because it can effectively help you with trend identification with an evaluation on the strength of the trend. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.